Hey all, good morning and welcome to ShareTrek. This is Raj here. And today I want to just take a summary of what happened in the market last week. Things are looking dynamic in the sense that we have both bullish as well as bearish signs. It's becoming increasingly difficult to discern which direction the market is going to go. So in today's session, what we are going to do is look at a jam-packed economic data calendar for next week. There are a lot of potential catalysts out there which can move the market either way. And I have one stock which I believe is in the process of forming a bullish pattern. It's potentially likely to form a bullish pattern. This is a very, very strong, popular stock, and there is potential to make money out there. So to find out what that stock is, keep watching. Let's get started. Well, friends, first I would like to go over the economic calendar because I want to point out to you a jam-packed economic calendar for next week. So there is going to be a lot of volatility there because there's potential catalysts. Many Fed chiefs are speaking throughout the week. So things can move either side. So let's take a quick look at the calendar. As you can see in this calendar out here, we have on February 13th, Fed Bowman's speech at around 8 a.m. That is on Monday. This is before market opens. And then at 11 a.m. we have consumer inflation expectations for January. The forecast is 4.7. The previous was 5%. Core inflation rate year on year January, core inflation rate year on year, month on month January, and inflation rate month on month January, and CPI January. All these things are going to come up at 8:30 a.m. again before market open on Tuesday, February 14th. And after that, when the market is already open, you have speech from Fed Logan and then Fed Williams speech. First is at 11 o'clock, second is at 2:05 p.m. And then at around 4:30 p.m., we get news of API crude oil stock change. The previous was negative 2.184 million. We have to see what happens out there. And that can also determine the movement in the price of oil. And then on Wednesday, February 15, 2023, before the market opens, we have retail sales data coming up for the month-on-month January as well as for the core, as well as month-on-month retail sales excluding autos. And after market opens at around 10 o'clock, between 10 and 10:30, we have 5 different data points that are going to come out at us. One is the business inventories, month-on-month December, National Housing Board, market index February, and retail inventories without auto month-on-month December, and crude oil stocks change, gasoline stocks change. All this data is coming in. And then on February 16th, which is the Thursday, before market opens, we have at least 6 data points. Philly Fed new orders February, core PPI year over year January, purchasers price index year over year January, and then jobless claims 4-week average for February, and continuing jobless claim February. And we have Fed Mester speech at around 8:45. And around 1:30 p.m. after the market has opened, we have Fed Bullard. And after that at 4 p.m. we have Fed Cook speaking. And then at around 6 p.m. we have got Fed Mester speaking again. So during all these talks by Fed chiefs, there is going to be some catalyst or the other the market may try to interpret, because journalists are going to ask questions and we may get some snippets. Based on how the markets react to it, there could be volatility. And then we are looking on Thursday, February 16th, at a whole bunch of pre-market catalysts. The first one is PPI month-over-month January. That's at 8:30 a.m. And then core PPI month-over-month January, again at 8:30 a.m. Initial jobless claim February 11. And then we have Philadelphia Fed Manufacturing Index for February, Philadelphia Fed Manufacturing for February, capex index for February, and Fed prices paid for February. And finally, on Friday, before market opens, we have Fed Barkin speech. So as you can see, guys, many of these things I don't even follow. Like, for example, Philly Fed capex index or Philly Fed prices paid, etc. I don't go that deep. That there are some major points out here. I'm definitely interested in CPI inflation. I'm definitely interested in looking at crude oil stocks. I would be interested in looking at jobless claims and continuous jobless claims. And whenever there is any speech by any member of the Fed, I would like to listen to that and see what happens out there, because those are all major catalysts that can drive the Fed towards a certain objective, and also that can drive the markets towards either selling or buying. So it's a very critical data loaded week ahead. So having said that, let's proceed further. Well, here we are in our TradingView platform, and I'm going to have a look at the futures first. We are in NASDAQ futures. Each of these candles is a one-day candle. And friends, I had plotted a pennant. It seems that the pennant is not going to work, so we have a flag. So this again is a bull flag. And what we want to do is we want to bounce off from the bottom here and go up. So that's what we are looking for. Let me fine tune this. And so we want to bounce off this bottom and start moving upwards. And if that happens, then I think we have a chance of breaking on the upside, because there's a kind of consolidation that's happening. But when I look at the MACD, I'm not very enthused, because it is turning towards the signal line, ready to cross over to the bearish side. And also the momentum is dropping towards the 50% mark. So momentum is not as strong as it should be, but it's still above average. So let us hope for the best. But if you look at the change so far in NASDAQ futures, it's negative 0.64. So it's not pointing to a bullish outcome. So it's rather bearish. Now let's go ahead and look at our indices. And first I would like to look at oil. And the price of oil seems to be in a consolidation range. So I'm going to remove this bull channel that I had out here. We're just going to delete it. We'll bring it into action later on if required. But right now I'm looking at the key resistance out here, which is at 82.43. So that's the level that we need to cross in order for oil to start gaining more price. We have already broken out of the bear channel, but we are in a consolidation channel all the way from 18th of November 2022. So we can see that the higher lows have also consolidated on 4th of January and also on 6th of February. So it seems that the oil price is getting strength in the consolidation. It's coiling upwards. So we'll have to see. The critical test is whether we can break through this line of resistance, this thick red line out here. And as oil price goes up, it's going to create problems in terms of inflation. And that in turn will make the Fed hawkish, and that will make the market weak. That's the chain of thought. Now, when we look at QQQ, it has broken down below our bullish pennant. So now I'm going to put a bull flag out here and let me arrange this. So I'll put a bull flag out here. And we also have support at 298.20, which is this fluorescent green or blue line, which was the resistance for our consolidation zone all the way starting from 14th of September 2022 all the way until 1st of February 2023. And after that we went up, and now we are consolidating into a bull flag, and we have to bounce off this support at around 296.75, and we have to stay above this line of support, and then our next objective will be to break over this line of resistance out here. That's what we are ideally looking for. Now, if I look at the MACD, it is turning towards the signal line, almost ready to cross and become bearish. And the momentum is also above average, but it is pointed downwards. So QQQ is not looking that promising. And if you look at S&P 500, S&P 500 is exactly on the line of support. Momentum is pretty good. It's above average and it's pointed up. So it shows that there is a little bit of bullishness left in S&P 500. And again, in S&P 500, you can see a kind of bull flag out here with the consolidation. If I was to draw this line at the bottom and color it green because it is a line of support. And I'm going to draw another line out here, and I'm going to take it from here to here. So this is our bull flag, and we want to bounce off this very, very strong support, which is a confluence of the support for the bull flag and the support for the bull channel. So if we bounce off from here, then we can go up. So right now we have seen two bullish signals out here. And now, if you look at the MACD, there is a bit of bearishness out here because MACD has already become bearish. But the momentum is above average and slightly flat, but slightly pointing upwards. So I'm hoping that we are able to bounce off from this point and test the resistance of this flag, which is going to be out here for Monday. It's around 412.71. Next, let us look at IWM Russell's index. Again, we have a bull flag out here, and we are looking at the support of 188.96. And if we break through that, then our next support is going to be 183.92. Our MACD is bearish and momentum is flat but above average. We need the momentum to pick up, otherwise this is not going to work out well. And then if we look at Dow Jones Industrial Average, we are looking at the pennant which was preached upward. Again, we have come back within the pennant, and our MACD is above average and it's pointed upwards. But MACD is bearish, but momentum is above average and pointed upwards. So I'm hopeful that Dow Jones would potentially stay above this diagonal line of support of the bullish pennant. It may drop in sympathy with the broader market and stay within this pennant. That's my hope. And if you look at VIX, VIX has already broken above 19.75. It's no longer in the swing trade zone, but this inverted hammer bearish candle is a bearish sign. So that indicates that VIX is likely to come down and start testing the support at 19.75. To mark this as green so that you can note that it's a support. MACD is bullish and momentum is above average but pointed downwards. So if VIX goes down, then it's going to catalyze the other indices. That's why I'm saying it's a mix of bullish and bearish trend out here. And it's becoming extremely difficult to discern the direction. And if you look at US dollar index is poised to break above this diagonal line of support. It's already broken above, but tomorrow also it's likely to stay above. And I'm going to convert this into a support. And then we have this line of support for the pennant, which was drawn earlier, which is probably likely to become the new bull channel for US dollar. And when US dollar goes bullish, it means money is going to come from other markets in here. So it's bearish for the stock market. Now let's go on to the tech majors who influence the index. If you look at Microsoft is looking at a very, very strong support out here at 259.95. MACD is bullish. Momentum is also above average and slightly flat. Apple has got a gap fill to do, a very small gap fill. It has got a potential target, cup and handle target of 161.09 to achieve. And on Friday, it opened low, but it went up. So that's a positive sign. Our MACD is MACD is bullish, but tending towards the bearish side. And the momentum is very above average, and it is slightly pointed upwards. So I'm hopeful that Apple will regain. One of the other catalysts, I think, for Apple is that Apple has moved production, 26% of production of Apple iPhones to India. And it has started a relationship. And recently, the US Secretary of Commerce also visited India, as I mentioned in my earlier video on the huge lithium find in India. So there's a good possibility for Apple to move further production into India progressively and gain a lot of synergies, because right now China is importing lithium from across the globe, whereas for India it will just have to mine within India and produce it into the factory. And in fact, Apple can put a factory closer to the lithium mines and reduce the transport cost, and therefore have much increase in its bottom line. So I'm expecting companies like Apple, who have manufacturing in India, to improve on Monday. So I'm hoping for a positive outcome for Apple on Monday. Amazon is down 0.64 from Friday, and it has traded in a very, very narrow range. And MACD is already bearish and momentum is just at average. So there are two possibilities. One could be a morning star formation where we have an opening green candle and we end above this doji candle out here. It's an indecision candle. So the market is also indecisive with regard to Amazon. So if we form a green candle which ends above this doji candle, then we would have morning star formation. It's a bullish pattern and will go up. Otherwise, if the market trend is negative and we start falling down, then we have to look at a support that we can see for Amazon, and that support I would likely see out here. This is going to be the support level that I would put here, and it's at 92.68. So that's my support level for Amazon. Google is down minus 0.63%. And it has fallen below a whole range of supports. It's a heavy fall for Google, even though Google has barred, but I think the delivery by Microsoft made it seem to be on very sound footing, whereas that made Google barred seem weaker, but I'm confident that Google will bounce back again. I think the next level of support for Google, I had not drawn a lot of supports out here. So this is going to be the next line of support for Google. And if we fall below that, then I'll draw more lines. But right now, that's the next line of support for Google. Now, let us also look at our moving average. It's time to bring in the moving average. Now, if you look at the moving averages, we still have support from the 50-day moving average, which is this thick orange line. That's going to be another level of support before we try to tap the support out here. And in terms of divergence, I don't see any bullish or bearish divergence out here. They're all in sync. So that said, it's not clear how the index movers are going to move and how they are going to influence the overall market, the indices. Now let me go on to Genomics. And in Genomics, I'm going to sort this out so that I have the biggest winners on the top. And the biggest winner was SQZ Biotech. And again, their chart is still weak because momentum is below average. And they are being constrained by 3 exponential moving averages. And we have the support from the 10-day simple moving average, which is the yellow line. So just the yellow line, 10-day simple moving average is giving it support. It is still a very weak chart. PSEB went up 0.50%. It has broken out of the bullish pennant on a downward side. So what I'm going to do here is I'm going to reposition the lines and make a bull flag with a hope that we are in a position to bounce off this bull flag. So when I draw the bull flag out here, I'm expecting that tomorrow we have to bounce off from this line of support of the bull flag. If we don't do that, then we are on a downtrend. So we have MACD, which is already bearish, and momentum, which is below average. And it's slightly pointed upwards, but mostly flat. So I'm not expecting anything great from PSEB tomorrow. I'm thinking that it's going to break down below this line of support. And then we'll have to draw new lines of support to see where it can stop. But in the meantime, I would definitely say that our 100-day simple moving average, which is this blue line, fluorescent blue line at 8.91 is going to provide a good deal of support. And if I was to go and look at Illumina, it was up 0.37%, but the chart is still very weak. I don't expect much from there. Fate Therapeutics was up 0.32%, but it's still below all the 4 moving averages. MACD is bullish, but momentum is weak, so the chart is weak. Verve was up 0.25%, but it's still below the line of resistance at 20.82. So that's going to remain the line of resistance. MACD is bearish. Momentum is also below average. So I don't expect much from Verve either. Caribou Biosciences has got some negative catalyst, and I hope it's here in TradingView platform. I don't have the news out here, but the news is that Pomeranz law firm has launched a class action lawsuit against Caribou Biosciences. So it was already on the works, but now it has been filed. So I'm expecting a little bit of drop in Caribou Biosciences when the markets open on Monday. Bionano Genomics was down 0.64%, and the chart is still looking weak, so it's going to go down further. Allogene was down 0.72%. Again, chart is looking weak. It has got support, which is at 6.53. So I'm expecting Allogene to go down. And if you look at DNA, it was down 1.14%. Now it's coming very close to my liking. I was thinking that I would buy at 1.79, but I have decided to wait further because the chart is also looking weak. Now I would aim to pick it closer to 1.54. So that's my thought process at this point of time. All the moving averages are above DNA, so chart is weak. IMTX is down 1.55%, and we have a bullish MACD, but the momentum has dropped below average, so that's not a good thing. ARCG is also down. Beam Therapeutics is down 2.23%. MACD is bearish, momentum is also weak, and it has got support out here. I'm going to mark this as a thicker line so that you can see in your smaller devices. 4.22 is the next support for Beam. CRISPR Therapeutics is down 2.55. I think that there should be some bullishness in CRISPR Therapeutics. We have fallen below the bullish line of support. I'm going to mark this as red because when we start moving up, that's going to be a resistance that we have to break through. We are getting support from the 50-day simple moving average, which is this orange thick line, which is sitting at 49.16. If we break that, then we have next support, which is going to be at 47.93. Right now, I'm going to mark the supports that we have breached as resistances. I'm hoping that, I'm expecting that tomorrow CRISPR will again be bearish, but I hope that it bounces off this support line out here. There's a lot of bullishness in store for CRISPR Therapeutics because it's very fast approaching approval of its sickle cell disease therapy. Now, CRISPR Therapeutics is over. Let's look at Bluebird. Bluebird is still consolidating in a range, and it's getting support from the 200-day simple moving average, which is this thick white line. And MACD is weak, and momentum is also weak. So I want it to bounce off this 200-day simple moving average. That's all I can say at this point of time. Also, they need to bring us more news about their monetization of Zynteglo and Skysona. So until we get to hear from about those things, I don't see any catalyst out here. Next is Intelia. It was down 2.75%. The MACD is also bearish, and momentum is also just below average, and it's getting support from the 50-day simple moving average. So I hope it bounces off this 50-day simple moving average. Next, I'm looking at Invitae, which was down 6.31%. It has broken down below our support, which was at 2.15. So I'm going to mark it as red, and it's moving towards the next support line, which is at 1.86. I'm going to make this line a bit thick so that you can see it in your smaller devices. So this is what I have here for you guys. Next, let's look at the fear and greed index. So on Friday, we were in greed, and I'm expecting that we are going to move slowly towards neutral on Monday. And if we were to take a quick look at the market momentum has started falling. So that's also another matter of concern for us. Here we are in the market heat map, and I'm looking at one-day performance. So this is just the Friday performance. And you can see that on Friday, those consumer defensives have started becoming green. Energy has started becoming green. Healthcare has started becoming green. Insurance has started becoming green. And if you look at utilities, they have started becoming green. So we are all moving away from risk. We are going to risk off kind of a situation. And we are looking at, not risk off. We are looking at a situation where the market is fleeing from risk and going into more consistent themes. And you can see all the technology sector is red. Now, if I was to go back and look at 1 week performance, you would see that during the week, we had started moving more towards the away from technology and moving more towards more of steady themes which are associated with lower risk. So you can see healthcare going up out here, and you can see parts of aerospace defense and parts of insurance, those kind of things going up. The lone bright spot out here seems to be Microsoft, which had come up with a big announcement of ChatGPT, and Tesla. So these are the two major exceptions when it comes to technology companies, and otherwise everybody else had gone down. And now if we were to look at the whole month as a performance, the last 30 days, you can see that technology was still strong at the beginning. And now as we go further ahead, I'm expecting technology to start losing and becoming red, and consumer defensive becoming greener. So that's what the trend seems to indicate to me. Well, friends, you have watched patiently so far, so now it's time to unveil the potential profitable share that I was talking about. So without further ado, let's go to the TradingView platform and I'll show you this chart and why I think it's going to be potentially another opportunity to make some good money. Well, here we are in our TradingView platform. Yet again, we found ourselves looking at Tesla. So if you look at the story of Tesla, you know that since Elon took over Twitter, and there had been a lot of bad blood and bad publicity, and as a result, Tesla shares kept falling. But they delivered some good results, and immediately the share price started coming up. And right now, they have bounced off a resistance, which is around 209.73, and they have started coming down. So what I see here as a potential is that we have a shoulder out here, and we'll consider this to be a head and this to be the potential support. And if you look at the MACD, it is still bullish, but RSI is overbought, so it has got to consolidate and give some. And next week is going to be full of economic release data. So there is going to be a bit of conflict out here for Tesla, because on one hand, the new lithium discoveries are going to take India out of the lithium buying activity, maybe in 2 years time frame, which means that any forward purchases that India is making is going to start tempering down. That would mean that the global lithium price has got to ease a little bit, which will add to the bottom line of Tesla. So there is a positive catalyst definitely out there, and a big announcement from him, which is going to be Master Plan 3. That's also in the works. So the current market weakness, overall market weakness, is likely to bring Tesla down, and I'm pretty sure it's going to bounce off this line of support. And when it does that, you will have a perfect head and shoulders. And if that is the case, then that's a very, very bullish sign, which means we're going to break through and get out of this long-term bear channel and start seeing good days all over once again. So that's the biggest revelation I have out here for you that I wanted to share with you. Friends, I hope you liked this video format. I'm trying to make this more interesting and more relevant. If you have any feedback, constructive feedback, please put it in the comments below and I'll definitely consider that. And if you like this video, please press a like out there. And if you're one of those 58% of people who watch but have not subscribed, I request you to subscribe. It's not going to cost you anything. It's going to help the channel grow. Please subscribe right now. Thanks and have a great day. I hope you have a great weekend. Bye for now.